right, I'll begin with you. I suppose, very briefly, just your initial reactions to what we've heard here. We've heard from the Deputy Governor of the Central Bank. We've heard the report by AEDS. Do you concur with what is in there? What are your initial reactions to what we've just heard?
Thank you so much. I need to acknowledge the presence of the Deputy Governor, Dr. Mach. Yes, he was my lecturer. Yes, it's true that I used to get 100% in most of the exams. So if you can get 100%, it means that you are at par with your lecturer in terms of thinking. Yeah. So if I'm going to say anything here, understand that I'm at the same level with my lecturer. Yeah, I really agree with most of the sentiments. I think the fact that the economy is in growth mode is not in denial. There is physical evidence everywhere. You see, there's a point where people talk of growth and you can't feel it, you can't see it. But for us that are in business, you see revenues growing up, you see even the physical infrastructure. I think this is the only time in many years that we've seen companies investing in physical infrastructure. You don't invest in property, plant and equipment if you are not positive about the future of the economy. So yes, I think in general, I agree with Dr. Machi that the economy is in good shape. And I think for the first time, the president appointed politicians to run the central bank. So for years, we had the challenge where the president would get technocrats to run the central bank. And for the first time, I mean, it has been confirmed, Dr. Mshavano, Dr. Mache and the team, they are politicians. They are not technocrats. You can't go for a year with zero financing, central bank, without accommodating government, if you are not a politician. You can't be a technocrat sitting at the Reserve Bank and the government knocks and say, I need financing, and you say no. It's not possible. So I'm happy for the first time that we now have a politician that is running the central bank. And I think it's all clear to everyone that this is a very strong team, a very strong political connection. I guess John is one person that you go and say, the president that says this, and he says, okay, go and tell him that John has said no. You know, which is something that would not ordinarily happen in a normal technocratic or a normal institution run by technocrats. But I think when you look at all this, there are apparent contradictions from the policy framework. Zimbabwe has had a record tobacco season, 2025. We've had record wheat output, 2024 record gold output, 2025 record platinum, 2023, 24. I mean, we have record production, which is, like I said, is evidence that the economy is growing. So if we have record, if we're excelling in everything, and we're using the US dollar, why then should we be worrying about the ZiG? Why should we have a policy framework that is now focusing towards the ZiG? Because everything else is showing that indeed we are doing everything right. Everything is right. The companies are happy, everyone is happy. Why then would these politicians now, remember I said they're not technocrats, why would these politicians want to disturb the peace that is happening? I think that's one issue that should be for broader discussion. What are really the issues that are informing these politicians and policymakers to believe that the current good times should not persist? In the last 3 decades, we never had record production of maize because we usually had this local currency that was always difficult. We never had record production in gold, in all aspects, and now we've achieved that because for a while we've had sustained stability. So I think that is the question that I would pose to Dr. Mashi and his team members and of course other policymakers. Why now? Of course, as an analyst, I understand why, but I don't think that is how these guys are putting it across. So yeah, so that would be my take on that. That probably, if it ain't broken,
Why fix it?
Why fix it? I'm a car fanatic. You saw Toyota brought the new Hilux, The new Hilux. It's exactly the same engine as the GT6. Even everything except just the center console, right? Everything is almost the same. And the reason is, the Hilux has been a very trusted and reliable car for years, right? That we have all come to love. Why do you want to change it if it's still working, right? So if the US dollar environment is still working, I don't see the reason why we should fix it. It's working. Results are there for everyone to see.
Okay.
Right.
If I could stop you there, bring in the other panelists. Let me begin with you, Latifa, as well. If you could just hand the mic to her, Brains. Just again, your initial reactions. I know Brains has really touched on the issue of currency, which was something that I'd noted here. There are a couple of themes that I want to talk about, but again, just your initial reactions to where we are.
Thank you, Farai, and good morning, everyone, particularly our honored guests. So coming from the banking sector, I want to start by saying I am seeing the reality on the ground of these indicators. We are seeing that currency has been stable over the ensuing period. We've seen inflation stability, and this has, and in interest rate stability too. And I think this has contributed to some form of certainty in the market, indeed. But I'd like to bring us back to the key role that the banking sector has to play in an economy, and I defer to that because that's where I am from. And also to hasten to say that we do have a very good cordial relationship with our regulator, and we do discuss things, and they are open to our suggestions. Taking from the report, though, I do feel that we need to continue with some cautious optimism. I believe that as a sector, our role is to ensure financial intermediation, and in doing so, it's to ensure credit creation. And like you said, I probably won't talk to everything, but when I look at credit creation, I look at liquidity, and I look at the unavailability of credit, liquidity. You also see the 0.4% growth in loans, which is a clear indicator that might not be sufficient to sustain an economy. So it does worry me. I look at the access to other sources of funding, which can be your foreign loans. And I believe that we are not able to draw in the necessary capital to support businesses because of some of the policy issues that are in place currently, and one of them being probably the SI around the multi-currency system up to 2030. So until that is changed officially, we might continue to face some challenges. I think the issues also around government managing to pay off whatever they owe does have an impact in terms of country rating, and this does impact access to liquidity and loans. So again, it's a call to say, let's continue looking at those issues. How do we improve this? It's very imperative for the economy to continue on a sustained growth trajectory, to be able to access the necessary capital. Yes, Brains has said buildings are there, but in the end, you also need the OPEX to make sure that those buildings give you the return on capital. So I think those are my initial reactions. I'm sure we'll have another round to come to it.
Indeed. Nigel, I couldn't help but notice the spring in your step as you were coming to the stage, obviously because of what happened in the Champions League last night. But yeah, as you give your initial reactions, I want to put this to you because I'm happy that this report speaks to the social side of it. I was at an event last week where one of the presenters talked about, and he's a corporate trainer, and he talked about a mentality, he called it the Zakadakwa syndrome, where despite all these great numbers, when you speak to people out there, there's always, when it's our things, it's Zakadakwa, mara iskutenderera. Why is there that disconnect? We're doing well on the currency front, clearly, but perhaps there's a currency that we are still lacking, which is maybe confidence.
Well, thank you, and good morning to you all, particularly the top table. I'm not a student of this deputy governor, but a student of the other deputy governor. revealing my age, I guess. But yeah, I think, Farai, when we talk to people in the real sector, I think there must be payments still outstanding in terms of infrastructure finance. There was a delay which the PERMSEC acknowledged in terms of the payment to microfinance organizations, for example. And if you listen to that very informative discussion with George Guamatanga on the Friday night drinks, he took time to explain this public management system deficiencies. And so that money didn't quite get to the market on time. And by the time it doesn't get there, there are consequences. We also see and must acknowledge the retail sector, formal that is, continuing to struggle. I mean, dismal picture of Bon Marché shops being closed. My dad's a retailer in Indagakura Kuserukwe Kaunda, and he's shutting down. Clearly, I mean, we think it's about time he slowed down anyway. But managing a retail business today with so much informality is a real challenge. So I think there are sectors that are battling. I think we still have porous borders somewhere along the lines. Go downtown. It's real. And we are contemplating formalizing it, but we're not there. And I think we had a discussion with Brains earlier on. Brains was in the fast food business. The margins came down. Can I disclose Brains? And he exited that market. He was doing quite well. I liked his shops. He had 7 outlets. I have retailers that I used to service as a bank. Food World is non-existent. So I think those are some of our real challenges. Let's talk about pricing in general for Zimbabwe. And I think this speaks also to the outlook. I think we were accustomed to huge margins. Let's be brutally honest as the private sector. We were psychologically not a volume-oriented society because you could always jimmy the system by taking margin on the exchange rate or washing your forex and taking a premium rather than focusing on production and productivity. Now, I think when the tide is out, we now know who's naked, right? If you ever been to the beach, when the tide actually comes in and goes out, Vasina swimming costumes, chayo. But now we are beginning to see the realities. And so I think the outlook for us as Zimbabweans then points to the fact that can we compete in the region? Because if goods are still coming from South Africa and throwing our manufacturing sectors out and then destroying our retail sector, then we got real issues to contend with as business people. I love Prof. Mgano's intervention to say in board meetings, it's no longer the exchange rate story. It's now about real production, sustained profitability, and strategies to be able to do that. So we need to re-equip, we need to retool seriously, we need to compete in the region, we need to watch our pricing so that we can still export if we make things. But at the moment, we are not making things. We are still exporting raw materials. And yet we need to beneficiate. We need those 7 sectors that the Ministry of Industry and Commerce narrowed them down to and say, these are our value chains as Zimbabwe. Now, how do we get a competitive edge to not only supply our domestic market competitively, leaving a margin and exporting? Because we were exporters. Let's look at our pharmaceuticals. We were regional exporters pharmaceutical. Let's look at our milk. I see Mkoma Anthony here. We could compete. But when you look at milk production, yes, it's up. I saw a report the other day that says it's up. But it's up on a year-on-year basis. But it's nowhere near what we would call the WHO levels of consumption of milk. Okay? Regionally, if Malawi can produce milk competitively, if South Africa can produce, why can't we produce milk here and have a herd that allows us to get to the volumes that allow us to be competitive? So I think that's where I have issues. I want to just take advantage of the fact that now the global issues are the risk issues. And I applaud the Reserve Bank for this stance. It's almost a stubborn stance because I'm from the Economic Society and we've had various tough wars with the Deputy Governor because he's a frequent attendee. And I think it's commendations. You've hit your macro monetary aggregates very well. We are riding off the wind of gold prices. I love that.
Yeah.
Now, can we build our reserves? Can we get to the 3 months? And how rapidly can we get there? We now have what? Caledonian. I mean, that's a huge feature. A huge gold mine coming on stream, wanting to raise $100 million. And the applications come out at 600 million to do deep, gold mining, professional mining. Kwete kukorokoza. I don't think we can really do great and phenomenal things, nemakorokoza, respectfully. They're contributing, but let's get some serious miners on deck. So if we've got those mines, what is it that Caledonia has done to raise 100 million that other gold miners can't do? I mean, if we did that, Deputy Governor, the government owns mines. Let them also follow what Caledonian Mine has done and bring equity capital into Zim. Okay? But let's also look at the risks. The US dollar that we Zimbabweans love, greenback, ukamuti muZimbabwean, tinenge tisina kudzidza. And I want to reschool us. Watch what's going on in the US. The US has been printing money. The fate of the US dollar, in my opinion, isn't good. If you look at them wanting to fire the Federal Reserve chairperson, it's because he's been resisting the printing of money. Treaties. Kana kuenda ku court kuti musandidzinge. Anditika, it means that administration wants to print money. Are we together? The president there has actually promised a 4th round of giving each US citizens $1,000. That's where the resistance is. Yeah. That's printing money. Yeah. Okay? Yeah. The fate now of the US dollar, if you look at the reserves of central banks, they've reduced their US dollar holding. Okay? They're going for gold, they're going for other currencies. And so in that respect, when I see 500 million in actual physical gold by the Reserve Bank, I'm hoping there are other minerals, as they've said, and I'm hoping there are other currencies. Yeah. I think we got some drama coming up with the US dollar. Those tariffs that have gone up have increased prices in the US, which then speaks to imported inflation. Okay? And for us as a US dollar lover, we will then face the consequences of that. So what am I saying? I'm saying I think that portfolio, if you look at the triangle, the geopolitics speaks to what? The Eurozone is going their own way. Okay? China is going its own way. Russia is going its own way. Let's look at our import basket and let's tweak our reserves in line of what we need.
Sure.
okay? Let's be strategic now to say, what does Africa want? What does the African Continental Free Trade Area want? Let's tweak our production, our exports to that.
To that.
Then we reduce our risks, and we can get to 2030, and who cares
What the currency is.
what the currency is? But
Now-
I don't want to prescribe it. I don't want to prescribe it, and I just, the last comment, if I can pick on what Latifa is saying. You see, when serious capital in the private sector, they will want to have some debt equity to fix their production lines. That means borrowing medium to long. When a government needs to fix roads and fix infrastructure, particularly with the rains we've had, you need medium to long-term finance. Now that governor, deputy governor, allow that borrowing specifically to be US dollar denominated, to put industry and commerce at ease, and then to put government at ease for infrastructure projects. Then I couldn't care less about that currency regime, because I personally am not necessarily fond of the US dollar in terms of my own global asset holding, because I think it's an ill-fated currency as long as they carry on
The way
with the
they're going.
madness that's going on there. Thank you.
Thank you, Nigel. Allow me now to hand over to the final panelist, Ms. Priti Nyati. Again, very positive sentiment. Inflation, I think if I could just get your thoughts on that, we Zimbabweans will have a very bad memory of that. But clearly, from what we're hearing, we won't quote him, but single digit very, very soon. So we're on the right path. Can this be sustained? What needs to be done to sustain it, as well as just your inputs on what we've heard?
Thank you so much. You know, numbers don't lie. What we saw from the presentation from the Deputy Governor and what Prof presented is complementing. So the projections that we have, they are very positive, be it US dollar, be it you are using ZIG. And currently ZIG is on demand. If you are holding a ZIG, it means that you are holding an asset. But other than that, I also want to look at the issues of inflation emanating from the imports. That sometimes the challenge that we face as a country, we are importing things that we can localize, we can produce locally. Looking at what the previous speaker has said, focusing on the geopolitical risk and the issues of supply chain, look at how we affected, our economies were affected when Ukraine had challenges. But this is the right time now to localize production. Looking at the key sectors of the economy, be it agriculture, be it the mining, be it the manufacturing sector, but if we are to export value-added products, we are likely to see more growth than what we are currently facing. And the challenge is that we are also seeing the food that is being smuggled, that is coming into the country because of there is that arbitrage opportunity and the speculation. Because of that, once we localize production, we are self-sufficient, there is food sovereignty, then it means that that speculation is no longer there. That arbitrage opportunity that we are seeing in the market is no longer there. Then I also want to add more from the main presentations that we got to say, let's treat gold as a lever, not just a commodity. Looking at the prices that we are seeing and the projections ahead, it's showing that gold is an asset. So let's utilize that as an opportunity to not just to export raw gold, but let's add value. Same applies to tobacco. We have seen a positive response in terms of the production. Last year, of course, we produced 11.6 million kgs of tobacco, but this time we are likely to get that times 3, right? But because of that, we are exporting raw products, but we are to value add that tobacco production, we are likely to see more growth than what we are faced with. Thank you.
Fantastic. Thank you so much. As you were speaking, I know, as all the speakers were speaking, the last point you spoke about gold, using it as a lever. I remember having a discussion with Afrexim Bank, and I know one of the initiatives they're trying to push is for all African gold-producing countries to set up reserves and then use that as, you know, collateral to then borrow long-term sort of funding. So I think that's the sort of thing you're talking about. And Nigel, we've seen other jurisdictions, Zambia, Kenya, Ethiopia, going into arrangements where they're saying, look, let's start accepting yuan. Let's offset our loans in yuan and being able to do that. So I think that also speaks to your point. I am mindful of the time and the fact that we have a limited resource of it. So at this point, I would like to open it up to the audience. If you have any questions, contributions, let's make them now. If you have any other hands, you see, unfortunately, when your boss is in the house and puts his hand up, even though he wasn't the first, you are then forced to defer to him. So over to you, Honorable. I think the mic, just switch it on. Yeah.
Thank you. Thank you very much, Farai. Let me recognize the Deputy Governor of the Central Bank, the Chairman of AEDS, and the great panel that's on the podium. Couple of points I just want to make, and I want to support her point. The governor, Deputy Governor, spoke about you know, the push or drive towards the monocurrency is not debt-driven, but it is a process. No one is talking about debts except the central bank. So I think you need to address that challenge within the central bank, because you're the one who has issued this statutory instrument. So I think the challenge is not with the private sector, it's not with the general public, it's the fear that has been created out of the communication by the central bank. And I do agree with you that we should not be focused on a date, but we should be focused on the process. And as you have demonstrated and supported by Professor Mgano, the process that the central bank is going through is showing the dividends for this country and for this economy. So I would urge you to address that yourselves than to expect that the private sector or anybody else would be able to deal with that. My next point relates to gold. We are in an environment where, thanks to the new US administration, thanks to the way they have really damaged their own credibility, the credibility of using the US dollar as a global currency, everybody is running to gold. And we are in this privileged position as a country that we have so much gold as a resource. And I'm very impressed by the numbers that have been shown by the Deputy Governor of the reserves that are being held. But I am worried that we're not doing anything to drive the gold industry in Zimbabwe, just, you know, ensuring, other than His Excellency's decision that we must get some of our royalties in actual gold. I'm not sure, maybe I just don't know, you can educate me, of what else we are doing as a country, as a central bank, as the fiscal authorities, to make sure that we are mobilizing more gold. For instance, why can we not say some of the capital requirements of the banks should actually be in actual gold? Because then we can mobilize more gold, we can make those banks finance gold production. If you go to finance or institutions, if you go to banks, they hardly understand gold, and they are very skeptical about financing gold projects, gold trading, because they fear or are afraid of gold. They don't understand it. And perhaps the central bank can push in that direction to make sure that everybody is seeing value in this gold, that Zimbabweans are not keeping the greenback under their pillows, as Dr. Nigel just told us. We're into some serious trouble if we are keeping the US dollar as some store of currency. We're better off keeping it as gold. Now, how much are we motivating Zimbabweans to buy gold and keep it within their banks as a real asset and not just to deposit and see a slip with a number and say, this is my asset, this is money. So I think that the central bank can actually do more to make sure that this God-given resource that we have in abundance is actually being mobilized, and that there is a motivation within the financial sector to finance the gold. Lastly, sorry, I just thought since there's not much chance for discussion, I may not get the opportunity for the second bite. I deal with all the bites right now. I understand the point that Dr. Shanakira made with regards the artisanal miners. Yes, Caledonia has raised $100 million. There was an appetite of up to $600 million. But frankly speaking, we have to recognize that the bulk of the gold that the central bank was talking about that is being exported is actual gold that is being produced by these Makorokosas. Even De Beers, to become the biggest diamond player in the world, it started by Korokozaring diamonds. So every Korokoza, every project of gold started at the Korokoza level. But I think what we need, because of the opportunity that gold has presented, we need real measures coming from the central bank through to the banks, the financial institutions, how to invest in these Makorokosas so that they can become the next Caledonia level mining in our country. I thank you.
Thank you very much. Any other comments or questions? I see another hand just to the lady on that table. Please go ahead.
Thank you so much, Deputy Governor Dr. Mache, for the presentation. So I have a quick question. I think on one of the slides, Dr. Mache clearly explained that the foreign currency receipts that we have are enough to cover the foreign current payments that we require. But on one of the slides, I also saw one of indicators showing that there's uncovered demand for foreign currency to the tune of 29.74 million as of December 2025. So I wanted to ask the Deputy Governor to unpack what entails the uncovered demand for foreign currency there.
Thank you very much. One more hand here. Go ahead with your contribution. I know quite a number of these questions have been directed to the Deputy Governor, but I know also panelists here are itching to respond. So after you speak, sir, we'll get some responses.
Thank you very much. Allow me also to appreciate the statements by the Deputy Governor. Mine is just to say in 2026, we will be taking chairmanship of COMESA, and that being the case, COMESA is actually come up with a digital payment platform for all COMESA countries. Some countries have been on board. A pilot project is actually commenced, but with Zimbabwe have not been part of that. Now coming to the issue that Zimbabwe is talking of getting to its own currency. Where do we stand now in trying then to work with these other COMESA Business Council members, since we are probably looking forward to host our own currency? Thank you.
Fantastic. I'll allow the panelists, if you want to comment or chip in to any of the issues that have been raised initially, before I then hand the mic over to Dr. Mache.
Yeah, if I can respond, I think the Honorable is on point. I have no qualms at all. I have no qualms at all around Makorokoza. In fact, I would buttress that position and say the banks, the microfinance organizations need to understand how these Makorokoza actually work, and then maybe partake in terms of the risk. I mean, you know, in my little world, I like to see access to capital, you know, for these people. If we can equip them, if we can give them the right tools, in fact, it goes further. If you look at what they've done in Kenya, it's allowing the microfinance, Makorokoza, to be funded in a manner that doesn't damage agriculture. And that's the real risk we have of going to the extreme end of saying makorokoza ande inawo, because they are quite damaging, as you may know, in terms of what they leave on the ground and then actually taking agricultural land. Take Chakari, farming area that I'm very conversant with. It's now Korokoza territory. And my rights are my rights and my farmers. It's perpetual fights. And then the damage that's done to the land. So if you look at Chakari just as an example of a district, agricultural produce, down, seriously down. Maize production, seriously down. Kwasara makomba, cattle falling into pits, etc. So I think then cyanide poisoning, of course, in terms of your rivers. So we have some real issues around that. So a guided, studied manner that will see production still within agriculture, not compromising, but also allowing them access to capital is a sort of model that I would go for. Yeah. I want to just shift a little to the fact that the budget came up with the tax issue, which I'm delighted to say the minister then rectified in terms of the card payments. But there's another dimension, and again the governor and deputy governor and I have discussed it. The crypto play is another one that's coming into play, because if you tax cards, there is an alternative if you are actually playing crypto. And I'm seeing pockets of that play, coming in. And I've got a paper here which I have written, because we did discuss crypto at the Zimbabwe Stock Exchange as an alternative, and I think I met the deputy governor at another conference. Because if you are using, and I will give you a classic example of the loopholes, if I am able to download a crypto play, there are less fees and there is no tax. Bear that in mind. So when you start taxing the cards, what happens? You also introduce a crypto play, and the chairman of Zimra is here. And it's a subject then that we discuss to say what then are the alternatives. And I'm interested also to know that the Reserve Bank have a bill, or I guess it's coming from the work that you've done largely. And there is a bill around the crypto and its regulation. And I think we've got also an opportunity as a nation to create more jobs with a local crypto. And I'm very much in favor of fixing that and being regulated by the local authorities, and we create another subsector of the finance industry. So beyond gold, Honorable, we are saying in Parliament, if you can hear us who are wanting to promote crypto play on that bill that is before Parliament, allow us to play and create our own local bitcoins and list them for public display and allow local trading in terms of that market. So there are certain things that are contained therein, which as a promoter and the research that's gone around it, I think that need adjustment. And I'm hoping that we can collaborate with the banks and engage them in that industry, with the central bank and then the Ministry of Finance with the oversight coming through that bill that will come into play. We need our youngsters to get involved in modern industries. We need unemployment and those social factors, the trickle-down effect that we're not seeing, to actually begin to manifest. I think AI is the future. AI must be incorporated in our agriculture, in our industry and commerce, so that we gain the competitive edge, because we are an educated people, populace, and we are also a trading populace as Zimbabweans. Let's take advantage of who we are and what we can do. Thank you.
Thank you. Brains, I know you wanted to come in.
Yeah, I just want to buttress what the Honorable said about the ZIG and RBZ, talking about it much. I think we're at a point where the market is not really worried about the ZIG. The only time that we worry is when we see Reserve Bank coming up with adverts about the ZIG, and we wonder what it is that they are trying to promote. And the environment is very good, we're happy. And when you see a central bank coming up now with these promotional adverts about monocurrency, it sort of unsettles a very good environment. So I don't know how the central bank can manage that, because, you know, from a policy perspective or from a market perspective, the moment you see a central bank now saying we are marching towards monocurrency, and it's good to say it once, but if you start putting advertorials and explaining, good things don't need to be explained, Dr. Mashe. Sometimes you start wondering what it is really. Remember, we don't have a very short memory. We had the ZIG. At the time, we were told it was the best thing. We started advertising the ZIG, sorry, the bond note. It was good for exporters, and we ran a lot of advertorials and many adverts, right, about it. And eventually we discovered, no. The reason why they advertised this thing is because it was not a good thing, right? So going forward, I urge the central bank not to, you know, to become like politicians that start advertising things. Leave it to the honorable. Honorable, I understand if you start advertising, you know, promises and many other things. Leave it to politicians. I know the Reserve Bank being run by politicians now, but look, you don't need to extend. But on the same note, if we just go to the figures, the central bank, there seems to be some contradiction on whether we are promoting the ZIG or not. The interest rates on the ZIG, they are very punitive, very punitive. The inflation is very low. The interest rates are 50%. In fact, I have one banker that I was talking to the other day, a CEO of a bank, and he said to me, no one wants to borrow the ZIG because it's very expensive. The few that had borrowed ZIG are now switching and saying, can I pay off the ZIG and convert it to a US dollar loan? So which currency are we promoting? I appreciate the fact that we're trying to protect the ZIG, but we need a balance that then ensures that whilst because if no one is using the ZIG, it will be very difficult then to just impose it on the market. Yeah. I think we need a situation where progressively we allow people to be able to access the ZIG. There should be a positive interest rate in the market, yes, but I don't think the differential, the inflation differential between the interest rate and the cost, the interest and the inflation is too high. In particular as well, when you look at the NNCDs, yep. The banks are complaining that you have excess ZIG on the balance sheet. They are wiped off by the central bank, right? But you have excess US dollars. They are not being wiped into non-negotiable certificate. Why the contradiction? Which currency are we supporting? Are we supporting the ZIG or are we supporting the US dollar? And lastly, I should say that going forward, I understand, because I'm an economist, I understand how we came to lose the US dollar in 2018. It's because at the time, we had more fake dollars in the system than there were real dollars. I think considering what the Deputy Governor said in terms of tracking numbers every time and tracking details, the most important metric that this economy needs to track continuously is the solvency. I would call it probably the solvency ratio when it comes to the US dollar. You look at the total cash US dollars plus the nostro deposits divided by, or as a percentage of the total deposits. That figure will tell you the solvency of the actual the solvency of the US dollar. It will tell you how much of the deposits in the banking sector are being supported by real US dollars. You understand when banks lend, they are creating money. When government gets an overdraft facility from the central bank, they are creating money. When government issues TBs that are questionable and they are monetized, it's creating money. But when you look at the figures that were presented by the Deputy Governor, I'm a bit worried. We are at $4 billion in terms of deposits. Cash and nostro deposits around 500 million. I don't know how much the Reserve Bank has in its vaults in terms of cash as central bank. But when you look at that solvency, we are around 20-something%. In 2018, when we eventually abandoned the US dollar, we were around 4%. So I appreciate that in 2021 we were around 71%. Those are issues that we as analysts we keep tracking. So when we see the Reserve Bank advertising that we're going back towards the monocurrency, we understand that they are looking as well at those numbers and understanding that we are morphing into that state where eventually, whether they like it or not. I think this is one conversation, I don't know how the Reserve Bank can put it across or come up and be honest that the return to the monocurrency is not that it's because the Reserve Bank wants it. It's because the economy would have created enough fake dollars in the system on its own, by its own activities, especially bank lending. We have high interest rates in the banking sector, Dr. Mashi. We are printing more fake dollars as the banking sector. And when you add up all that, that is what creates the challenge. The reason why eventually the central bank, when you look at them, it's like they are promoting a local currency, but when in real effect, it's because they've allowed the system to create its own fake dollars to the extent that if they don't do anything, eventually the system collapses.
Brains, allow me now to hand over to someone who's directly in the banking sector, Latifa, if you could hand the mic to her for her last words.
Thank you, Brains, and thank you to the contributors. So I just want to start off by saying, Governor, please don't take heed of the request to have US dollar NNCDs. Banks have not been calling on those. We actually would like the ZIG NNCD policies to be reviewed, as you are aware of. And then I would also like to comment on a few issues that were raised in the room. One by the Honorable around banks being able to use US dollar gold as part of their capital. I think it's something worth considering. It is a near cash instrument, and yes, would be quite welcome. Looking also at the exports, we talk about exchange rate stability, and then when you look at the graph that Deputy Governor showed, where we do have in July 2025 quite a spike in export receipts, and then we also talk about most of our export receipts being attributed to gold, which is commodity prices being quite high. You then also need to look at the impact of this on exchange rates in the long term. How do we smoothen out the cyclicality of our export receipts? We know that probably in June or July, that spike was due to tobacco. What are we doing? And I think there's been a lot of conversations around value addition and how that might probably assist in ensuring smoothening of our export flows, which also can lead to sustained exchange rate stability. I also would like to then comment in the same vein, what exchange rate stability does to inflation. We've seen sustained good inflation rates, and we're looking at an improvement this year. And Deputy Governor did talk about disinflation, and we seemed quite happy about that. But we also need to be cautious that we are not getting into a deflation, which is going to impact the economy negatively. And like you said, which is quite positive, you do stand ready to intervene, and please do so quickly, because I feel like aggregate demand is now struggling, and we need to now push that up so that we can see more economic activity. And then finally, on the digital systems, indeed, Deputy Governor, we have seen the cash economy growing. In fact, from a banking sector, we feel this might have an impact on our ability to continue to sustain our correspondent relationships, because we have to continue to repatriate cash offshore, which can raise a lot of concerns with the correspondent banks, and bringing into play the digital system or platform for COMESA, which I think will also support international trade, and we need to consider in earnest. Thank you.
Thank you very much. Dr. Mache, I know a microphone has been handed to you. I know quite a lot of issues have been addressed to you. I'll allow you the floor to respond.
Thank you very much. I'm sure I'm not going to
exhaust them all. Yeah.
Exhaust them all. There are places today in this country that have never seen or touched a ZIG. So you need to educate them. Honorable will tell you that one of the strongest push, although we are politicians, as you put them, they are more politicians than us, and they are complaining that their people don't know the ZIG. So when we talk about the ZIG, it's not to try to justify the local currency, is to educate the transacting public about the currency. It's nothing to do with its feasibility. It's nothing to do with its value. It's all to do with simple education. I talked about new notes, new durable, secure notes coming up. There's no other way except going out there and educating the public. One of the things you will see is, as an instrument for modern central banking, is communication. So this is part of the communication that we are talking about. You've got a point about interest rates, but we can talk about that. So the COMESA platform. So COMESA has had this platform for a while. It's called RAPS. Now, but the RAPS system is struggling not because the countries don't like using it, but it's almost being overtaken by another system of the Pan-African system called PAPS. And the reason PAPS is more attractive is that you can use local currency. Now, back to local currency. You see the ZiG where it's coming from? Yeah? We have to have it. Now, the idea is to be able to settle only the difference in trade between countries in an international currency or a convertible currency, whatever you would like to do. But not to trade, to use, foreign currency all the time. That's the idea. So PAPS is a very good Pan-African system that I think will completely eclipse RAPS if RAPS doesn't reform. And the reason why PAPS is getting more kudos than RAPS is that PAPS is bankrolled, if you like. It's supported by a balance sitting at Afrexim, whereas RAPS is a prepayment platform. So the companies tend to like PAPS, and Zimbabwe is already on PAPS. So we're doing good in that respect. Uncovered demand. Somebody asked about uncovered demand. What do we mean? So on a daily basis, economic agents buy and sell foreign currency. But the foreign currency they are buying and selling are generated within that market. However, what tends to happen is there may be foreign currency demand that the market doesn't have without the Reserve Bank. So that's what we call uncovered demand. So what happens is then the Reserve Bank goes in as a seller of foreign currency, in simple terms. So when you see that number, it's just indicating in a month or at a certain point how much that uncovered demand is. But that uncovered demand will then be settled when the Reserve Bank injects that foreign currency so that the market can completely clear. In terms of the gold industry drive, what are we doing to mobilize gold? Honorable, we already have an institution which drives gold mobilization, the Fidelity Gold Refinery. They have programs, they've got incentives to mobilize gold production, including these small scale producers or not being asked to surrender. So there is no surrender requirement for small producers in gold. That's an incentive, a big one. And they are offered cash for their deliveries. It's a big one. So a lot of work is going on in that area, including a brand new state-of-the-art second refinery that's being opened this month in Bulawayo. So there is a lot that's going on there. We can do more, but things are happening. And I think we need, again, brains, communication. We need to talk more about these issues, because it appears the public sometimes misses some of these communications. In terms of gold being a lever, I agree 100%. It's something that we have to do. But you know, Zimbabweans are very poor at beating their chest, very poor. And I keep giving an example of Americans. If an American has a dollar, they've money. They can tell you, I've got money, I've got $1. If a Zimbabwean has $100, they will tell you they don't have money. That's the difference. We don't speak up for ourselves. You know, we are the first African country, to digitally tokenize gold. The first country. In fact, the IMF, the World Bank, started talking about tokenization after we had tokenized. They were talking about tokenization in a very dismissive way. When we tokenized, that's when serious tokenization considerations began, including using digital tokens as part of bank money. And guess what? The conclusion right now from BIS is that tokenization is way better than, I think Nigel will not like me, than his virtual currencies. Look at the BIS report for last year, you will see. But these are issues that we've been trying to push. And so we need to beat our chests, and we need to use these instruments more effectively. Sometimes we don't do that. In terms of medium to long-term lending, to be allowed going forward in foreign currency, look, what does monocurrency mean? What happens when we move into monocurrency? The Reserve Bank has been at pains to say, if you go to countries like Kenya, like South Africa, like other countries, you will find that in those countries, there are locals who hold foreign currency accounts. Latifa, there is no reason why the bank should not borrow in foreign currency